And if we go over the slide, I think that, markets are really worried, as you know, about inflation. Central bankers are giving up now, starting to give up on the idea that it's transitory. We had this comment from Bostich earlier this week. Our view is that inflation is transitory, at least for now. And we can already see inflationary pressures dissipating. If we go over the page, quite simply, lockdowns distort inflation. And the comparison with last year is pretty key. Inflation was strong as the economy reopened after the Q1 lockdown last year. It was the usual culprits, insurance premiums and price of travel, items like that driving higher core inflation. And then it dissipated in the second half of the year because the economy normalized. And, you can see we're getting exactly the same thing again. Month-on-month core shelter was very strong after the economy reopened in March. We had these big numbers in April, May, and June. And then in July, August, and September, they've been much weaker, for 3 months in a row now. And if we dig a bit deeper, you can see that in the key prices over the page: airline fares, haircuts, hotel prices. These are the inflation subcomponents that have been notably inflated on reopening. Prices went up sharply. They're now shrinking month on month. So that's the service sector. I think it's same for goods. Have a look on page 20, the next page. You'll see, demand for goods was very strong on reopening. This is durable goods inflation, the red bars on the chart, and it's now fading. So goods, and by the way, goods demand's been intensified by Christmas orders. Those orders are now done, so there's less pressure on goods prices going forward. And I'd make a general point on goods as well, which is that demand for goods has been very strong because of the reduced ability to spend money on services during lockdown. So there's been a substitution effect towards goods, and of course we've seen that in retail sales. But as the economy normalizes, I think pent-up demand is going to be channeled towards services, and what we end up with is weaker goods inflation. As we get into next year, I think we'll have some very easy comps and pretty weak inflation in the first half of the year.